Right, welcome everybody. We are here today to talk about finally the 1 minute strategy, which I'm adding to the course right now. I didn't want to add it right away. Reason why is because I wanted to actually backtest the strategy a lot, test it on my personal account so I could see the results. I don't want to add strategies to my course if they're not working good, if I'm not comfortable with using them. I am personally using the strategy on my scalping account. So after some time of backtesting, about 2 months, I finally decided to add it because it is working very good and it is right that I actually put it in the course so you can learn it. You can decide if you want to use it too. So first of all, it is called the 1 minute strategy because we take entries on the 1 minute. Now, keep in mind that we will not only look at the 1 minute in order to enter, we will do multiple time frames analysis. This is why it works really good. We start from higher time frames and then the entries are on the 1 minute. This is why it is called the 1 minute strategy, all right? Now, wait, let me actually, okay. Now, we need to look for specific things when looking at the 1 minute. And of course, I will explain all of them to you in this video. The 1 minute strategy, as I said, as I mentioned earlier already, it is working very good. It is giving good returns, but needs to be used in the correct way with low risk and in certain cases. The cases I will show you in a bit, in which cases we will use the 1 minute strategy. I mean, you can use them in all cases, but you need to look for specific things in order to get your entry. Now, you can actually, as I said, I'm using it on my scalping account, but you can actually use it for both scalping or also just to get your entries for intraday trading. You can decide. Now, keep in mind that, as I said already, we will not only look at the 1 minute time frame because you cannot trade just looking at the 1 minute without looking at anything else. We start from higher time frames and then based on that, we move down to the 1 minute, right? So let's get started. I had actually many examples, like 2 or 3 examples ready, but today the perfect setup took place. I wanted to show to you uh, what we were looking for because this was perfect. So I want to do this example with you. This is a trade that we actually entered. And keep in mind that also for if you want to use the 1 minute strategy, another rule is that, well, I'll give you the rules right now. So the first rule is, as always, as all of my strategies, is to go with the trend, right? If you go against the trend, if you go against the market structure, then the 1 minute strategy will not work. Just like all my other strategies, if you don't go together with the trend, together with the market structure, together with the market, you will lose money because statistically, and at the end of the day, trading is about statistics. If you go against the trend, you have less chances of being profitable. So we will always want to go together with the trend, and this is the first rule. Second rule is to be very patient. Well, this is easy to say, a little bit harder to do. Third rule is to wait for the confirmation that I will actually give you, that I will show you later, and never get early entry points, okay? And the fourth rule is to use minimum 1 to 3 risk to reward ratio. I know that in other videos, in other strategies, the minimum that I say to use is 1 to 2 risk to reward ratio. In this case, for the 1 minute, I believe that it is worth it if you use minimum 1 to 3 risk to reward ratio. I usually find like 1 to 4, 1 to 5, also about 1 to 6, 1 to 7, even more sometimes. But make sure that the minimum is 1 to 3 risk to reward ratio. Right? So let's get started. We know that we want to start on the 4 hours, as always. We want to understand the market structure and the direction of the market. If you don't understand how to do that, go to my market structure video. I made a whole video about market structure so you can actually master how to identify and understand the market structure and direction of the market. So right here we could see that we had a bearish market structure, lower lows and lower highs. Finally, down here, this is Euro New Zealand. Down here, we made a lower low compared to the previous low, a lower high compared to the previous high, and then everything started changing. We have this higher low compared to the previous low, right? Higher low compared to this one. We don't care about it yet. Right here we have this higher high. Now this is a trade that we actually entered, so I'm not making an example just to make an example. You know, this is a trade that we really took earlier. I don't know when you will watch this video, maybe in the maybe a long time from now, but still this is a trade that we entered today, and I looked for the entry on the 1 minute. This is why I'm showing this to you. Just a perfect example, right? So as you saw, we had a bearish market structure. Finally, we started changing this bearish market structure from bearish all the way to the downside to bullish. And this is the reason why I started looking for buys. We made a higher low, we made a higher high, and then I understood, I said, okay, now I will wait for retracement to the downside in order to follow this bullish market structure. So in my opinion, we are not bearish anymore, we are bullish. Therefore, in my mind, I know that I need to start looking for only buys and stop looking for sells, right? This is like all the steps that your mind needs to do. After that, you start looking for a possible entry point. So first of all, you understand that we want to look for buys and not for sells anymore because the direction is probably to the upside. Now we need to understand, okay, but where do we enter in order to follow this bullish momentum? We need to find an entry point, all right? We need to find an entry point, and it is the same as always, same as you saw on other videos. So Fibonacci's, supply and demand, all right? So we have the Fibs, all right, as always, Fibonacci's, and this demand area, all right? If you don't know how to use supply and demand, go watch my supply and demand video. Now, this is just to focus on the 1 minute strategy. So we find this possible entry point. We know that we don't want to enter at the top of this demand. Reason why is because we don't have confidence. Remember, we always need to have confidence with something else. Just can't rely on only one thing. So we don't have confidence at the top of the demand area. We want to enter at the fib levels, right? So we understand, and we finally found our possible entry level. Now we can finally go to the 5 minutes and then 1 minute to start checking for entries. So first of all, we just need to be patient and wait for the price to reach our possible entry points, which will take some time, of course. You wait, goes down. Right, we are reaching the entry point. Now, remember, we're bullish on the 4 hours and we're trying to follow that direction. But where are we going on 5 minutes? Now that we are getting close to the entry point, we are actually going to the 1 minute, right? Where are we going on the 1 minute time frame? And this is why it is called the 1 minute strategy. Where are we going? We're going to the downside, all right? We know that we're bullish on the 4 hours, also on the 1 hour, of course. But on the 1 minute, we are bearish because we are retracing before having the push to the upside. I mean, we think that a push to the upside will happen, and we will see about that. So we keep going, keep waiting. All right, and we see that we hit the 62 fib level. This is, and you start doing the same thing as you did on the 4 hours. You start doing the same thing about market structure. So you actually look at the market structure on the 1 minute. So the high, the low, the lower high, lower low, lower high, lower low, lower high, and so on. So when we get right here, we have this previous high, right? And these are the previous highs. As you see, we come back to this previous high. We did not break it, so we cannot start looking for buys. And we continue to the downside. So delete this one, keep going, keep going. We continue to the downside, creating new lower highs and lower lows. This is all in the 1 minute, keep in mind. And we reach the second fib level, which is inside the strong demand level of the 4 hours. We are reaching the 0.705 Fibonacci level. Keep going. We know that we are hitting a possible entry level. And right here, we can see that something is starting to change. So first of all, this was the previous high. Previous high, you had the retracement to that, was hit, continuation to the downside. And now we can start noticing some higher highs, higher lows, higher highs, higher lows, right on the 1 minute. Now, we will not enter right away just because we see that the 1 minute is aligning with the 4 hours. We're not entering right away. I mean, you can, but don't do it. We want more confirmation, all right? This is like very specific. So we keep going. We can see that we are breaking above all these highs, creating a nice uptrend, creating higher highs and higher lows, all right? Perfect. Even better, breaking these previous highs, all right? Which were even stronger. So right now, after we saw this, we are 100% bullish, okay? We are 100% bullish after breaking the market structure right here and also this one. This is all in the 1 minute. Continuation to the upside, crazy continuation, right? And we finally start seeing a retracement. Let's wait for this retracement. All right, all right. So keep in mind what happened right here, because we will come back to that later in a bit, all right? So start seeing the retracement. Let's check. Sometimes you need to go to the 5 and then go back to the 1 minute. You go back, check what is happening. Go back to the 1 minute. Okay. Perfect. All right. This is where you want to enter. Let me show you. So you saw this confirmation right here earlier. This trade could have been already taken, but we want to wait for something more. We want to wait for the actual move. And this is really a lot about understanding the psychology of the market. So as you know, the big banks, the financial institutions want to hit your stop loss before we start going to the upside. All right, this is the first thing that we need to understand when we are trading in general. Like before, this is why maybe sometimes we put stop loss to the entry and then the market just goes, comes back, hit your stop loss at entry, and then skyrockets to the upside, right? Because they want to hit your stop loss before they actually take off, right? Now, this that happened right here was already a confirmation that we could continue to the upside, right? You had the previous market structure. The market structure of the 1 minute was aligning with the market structure of the 4 hours. And this is what we're looking for, because maybe on the 4 hours you're going up, but on the 1 minute you're going down. And that doesn't correspond. You want the two to go together. So we're going to the downside on the 1 minute. We knew that on the 4 hours we were bullish. We were waiting for the 1 minute to align with the 4 hours. Right now, it was starting to align right here when we had the break of the previous structure. This was already a nice confirmation, break or retest for a nice continuation to the upside, all right? We didn't enter yet. Reason why is because we know that usually market makes a fake move, comes back to hit the stop losses or to to take off some stop losses, create some panic to the people that maybe some stop losses will be hit even lower, and then takes off. Right now, what we will look for is a possible manipulation before a strong push. So this type of coming back here is a possible manipulation. Also, Right here, we were establishing this support. Maybe a lot of people were entering right here. And then you get this manipulation to the downside before the price goes to the upside. Keep in mind that sometimes you need to check actually the 15 minutes or whatever before entering. Now maybe you missed this entry, and I will show you some other entries that you can take still on the 1 minute. This is all about starting from the 4 hours, checking lower time frames, and going all the way down to the 1 minute. Now, maybe you missed this change in market structure on the 1 minute or whatever, right? It is fine. Still, market structure changed right here the first time. If you remember, market structure also changed here after this push on the 1 minute changed, and you could catch this second move. Now, what do we want to see? Guess what? This was on the 15 minutes downtrend, lower highs and lower lows, lower highs and lower lows. This is still a lower high compared to the previous high. This is still an equal low. And then what happens? A higher high compared to the previous high. This high is being broken to the upside by this move, all right? We're turning bullish. Turning bullish, and we want to get an entry. Now, we want to get an entry, but we don't know where to enter, okay? We need to check. We continue to the downside. You can just see we skyrocket, all right? Let me go back actually. Skyrocket to the upside. We want to get a possible entry, maybe because we missed the opportunities all the way down here. That's fine. You can still find some other opportunities. You miss these opportunities all the way down here. You are on 15 minutes. And let's see. You go through 1 minute. Oh wait, let me actually. On 15 minutes, you start looking for, after this push to the upside, you start looking for possible support. This is the support that we have, all right? Support, demand, all right? This is the demand that if this held, if this is not broken, we continue to the upside, all right? We follow the bullish trend. Everything changed. Right here was broken. We were going to the upside. Okay, keep in mind that this is the perfect entry for the 1 minute. You just see that we hit the demand of the 4 hours. We hit the entry point of the FIBs. Market structure is changing because it didn't change right here, so that didn't make sense to enter. Market structure didn't change on the 1 minute. It changed all the way down here. And if you didn't get the first entry, you had the market structure that was changing also on the second entry. Change of market structure, you wait for the break of market structure, so it is changing from bearish to bullish. You wait for the retracement, which will be about 2 or 3 pips, and you enter. All right, now I will show you where to place stop loss and take profit, of course, and all of that stuff in a bit. Now, we were saying, all right, we are looking to follow this trend, and this is the trade that we actually took today. After all this bullish momentum, we found this key area, which if it was broken to the downside, we were going to stop loss. We were turning maybe bearish again, but we went to the 1 minute and we saw that, we know that we're bullish, we're looking for buys, but we saw this downtrend on the 1 minute. So what we're looking for, as always, is a change of market structure. Right, and right here, it is the change of market structure. This is the previous high, this is a higher high, this is all in the 1 minute, and this is the retracement. Now, keep in mind, as I was saying, there is a concept called the spring. The spring is a fake move that the market makes in order to make the majority of traders think that we will go into a direction. That's why you see a lot of times a fake breakout and so on. So you will see probably a spring after this change. This is what we are looking for, and it is perfect because it is an extra confirmation. You will get like scared probably because you will think that you might not enter the position, but this is actually what we're looking for in order to enter our trade. It is even better. It is another confirmation. So right here you have the previous high. You go back, it's fine. Right here you have the higher high, and you know that you're waiting for the retracement in order to enter. But even better if there is a spring. So let me show you. You go down and perfect. This is the spring. This move right here is the move that makes you think that the previous low is being broken to the downside, all right? Even though the market structure changed right here from bearish, because this is the previous high, and we made a new higher high, and maybe you wanted to enter right here, you need to wait more. Just be patient. These are 1 minute candles, so it is not a problem to wait. And you will see this fake move. Of course, you don't enter all the way down here because maybe it is not a fake move. You just wait. You see this nice move to the downside, and then right after some candles going to the upside, right? These are all the stop losses being taken out, and also this is about making most of the traders think that we will continue to the downside, right? But we know that the market structure changed, and we know that this spring happens in order for us to think that way, right? Still wait. And we can get our entry here, right? We still wait. We see this huge push to the upside. As you saw, it happened right after the spring. The reason why is because the market grabs liquidity right here, grabs liquidity, knows that it is hitting the stop loss of many traders. It also knows that the majority of traders are exiting the market. They're not staying in this buy anymore because they see this breakout to the downside. It is not a breakout, it is the spring. Of course, we cannot predict that. If you've been my student, if you're looking at this course, you know that we don't try to predict the market, we try to go with the market. So we just wait, we don't enter down here just because we think that it is a spring, but we still wait. You see this move to the upside. This is a new higher high, breaking above also the previous high, and finally we can get our entry. We can get our entry maybe on this small retracement with this candle, and stop loss. This is the old concept. Stop loss below the previous structure, right? So the previous low, stop loss below that. This is only 15 pips stop loss. Take profit, we need to check for a possible area of take profit on higher time frames. So possibly this area right here is a nice take profit area. You see this target right here, and it is about a almost 1 to 4 risk to reward ratio, right? Let's check what happens later. Right? So right now we are actually here, but it is already good. Right here we are about a 1 to 2 risk to reward ratio. Yeah, almost 1 to 2 risk to reward ratio. We are waiting for that 1 to 4. All right. So this is all about the 1 minute strategy. Okay. Of course, don't stay there looking at all the market structures after you enter, because you will feel the need to actually exit the market earlier because maybe you see this move right here or whatever, right? Just make sure that you start on the 4 hours, you follow what is happening on the 4 hours, but you want to follow that by looking at the 1 minute. You know where your entry point is, you know that your entry point is at fib levels, at supply or demand level. You put your entry point there. When you're reaching your entry point, you start waiting for the 1 minute time frame to align with the 4 hours. The reason why is because maybe you have the 4 hours that looks like this, right? And it is coming back right now to your entry point, right? This is the retracement to your entry point. Maybe you want to enter from here, right? And now it's coming to the downside. What you want to do is that you need to understand that this move to the downside is a trend on lower time frames, so probably on the 1 minute, this is a downtrend actually. We need to understand that on the 4 hours, sorry if I repeat myself, but I want this to be clear. On the 4 hours, we're bullish, it is an uptrend, but of course, on lower time frames, since they are very small, maybe you only see a downtrend. Maybe this is all you see on the 1 minute. We're just going down and down and down for this retracement to happen, right? When we finally start reaching that area, we start waiting on the 1 minute for a change in market structure. I'm doing all the steps also theoretically to see what we're looking at. So let me delete actually this one. Wait. All right. So right now I'm doing the drawing of the 1 minute, right? On the left we have the 4 hours. Right now I'm drawing the 1 minute. The 1 minute is just going to the downside, and it is about to reach our entry level. Let's say our entry level is right here. This is the entry level, maybe the demand level, which corresponds to the fib levels, right? And we hit it. We hit it, and we make a new higher high, right? This is all we're looking for on the 1 minute. Downtrend, we know that on the 4 hours, this is the 4 hours, we are in an uptrend, but we are retracing in order for us to enter. On the 1 minute, of course, it is a downtrend. Lower time frames, this is a downtrend on the 1 minute, downtrend on the 1 minute, right? Right here, finally, what happens is that this is the previous high, and we make a new higher high, right? And therefore, we understand that the market structure is changing. What will usually happen, not every time, but what will usually happen is that even after this happens, you will see some manipulation at this area, because this is a key area where a lot of people want to get in, and not everyone will be able to stay in, okay? What could happen is that even if you saw a higher high compared to the previous high, and therefore maybe you expect also a higher low, instead of seeing a higher low, you see something like this. All right, and this one right here is the spring, right? This is what we are calling the spring, right? Reason why is because it is like a spring that like gives the force to our trade, to our pair, to actually go to the upside. It is like something holding it back before it is exploding to the upside, all right? Because this one right here, it is a grab of liquidity before we continue to the upside. This is all about the psychology of the market, psychology of the people, because at the end of the day, the market is based on people's behavior, right? And based on that, the institutions know how to control that, how to actually play with these emotions of traders. And they know that if this move happens right here, all the people that were entering right here because they saw the high will either hit the stop loss or just get out of the trade. We know that this will happen, not every time, but sometimes it will happen. You see a higher high, you start waiting for the retracement, and you have two options, honestly. I also do it. You either enter right here, maybe you can just enter about at the same demand area, inside the demand area, and you just leave a good stop loss size in order for the spring to have space if it happens. Or the second option is that you wait for the spring. If you wait for the spring, you have this possible entry. You wait for the spring to happen, then after the spring we make a new higher high compared to the previous high. Keep in mind that the spring already happened, so we're not looking for another spring, only one spring, all right? You never know what happens, but this is what we're looking for. We make a new higher high, which is this one, compared to the previous high. And perfect thing would be to wait for a small retracement to continue to the upside, right? And this is where the second possible entry that we get. Keep in mind that we don't miss a lot of pips from here to here. Maybe it is a difference of 4 pips, 5 pips. It is not a big deal, okay? And we enter right here. Stop loss below the spring, right? Take profit at the next resistance or supply, and keep in mind minimum 1 to 3 risk to reward ratio, okay? If it doesn't have a 1 to 3 risk to reward ratio, you don't enter. So I know I'm saying to you a lot of things together. It is like very messy, I understand. The thought process is really easier once you start practicing in charts. For me, honestly, it took some time to adapt to doing this stuff. Like for example, in the beginning, I was doing the same of the 4 hours and I wasn't waiting for the spring, okay? And I finally understood that the spring was happening, and also the reason behind the spring and why it was happening. And also I saw the results after waiting for the spring to happen, and I finally understood that the spring was necessary for us to trade the 1 minute strategy. We usually don't wait for that on 4 hours or whatever. This is mostly for the 1 minute spring, okay? And therefore, in the beginning, I was saying it was hard to actually adapt trading with this strategy, with the 1 minute, with the spring, and so on. But take your time, practice it, start understanding the market structure of the 4 hours, market structure of the 1 minute. Understand that on the 1 minute, you will probably see some fake moves like this one, and this is what you're looking for. Maybe a nice breakout of the previous high for your entry. Instead of entering all the way down here, you wait for that, you wait for the retracement in order to follow the direction to the upside, all right? So this is all we're looking for, basically. It is the same as always on the 4 hours. Supply and demand, Fibonacci levels, market structure, direction of the market, and then you go on the 1 minute for your entry. On your entry, keep in mind that you only look for your entry. Like, this is another very important concept. You're not looking for your entry at an area which doesn't correspond to a supply or demand. You're not looking for an entry here. Like if the market structure changes here, you don't care, you're not entering. You enter only if the market structure changes after hitting a key area, okay? Market structure changed, and then you wait for the spring and you see which entry you want to get, right? I gave you the 2 options, either all the way down here, it is more risky, keep in mind it is more risky, but of course you have a better risk reward, or you wait for the break of market structure, retracement again, and then maybe you get another entry here to the upside, all right? So this is all for the 1 minute strategy. Make sure to practice it on demo first. I also, for me, I practice it on a small account, on $1,000 account first, in order to see the results. Of course, it was the first time for me using it. Used it for 2 months, and then I decided to teach it to you since it is working very good with consistency. All right, with that being said, hope you liked it, and I'll see you on the next videos. For any questions, just contact me on Telegram or Instagram.